In the world of high finance, silence is often the loudest signal. While the retail market is fixated on the volatility of Bitcoin or the overextended valuations of mega-cap tech, a much more sophisticated play is unfolding in the sub-$5 category. We are currently witnessing a massive divergence between price action and institutional intent. If you look at the surface, you see a stock struggling to maintain its momentum. But if you look at the order flow, you see the unmistakable fingerprints of institutional stealth. For the past several weeks, we have been utilizing proprietary tracking tools to monitor dark pool activity. Private exchanges where the world's largest hedge funds execute trades to avoid moving the public market price. The data is staggering. We are seeing a consistent pattern of iceberg orders, massive buy blocks broken into tiny pieces to hide the true scale of the accumulation. This is not the behavior of day traders. This is the behavior of smart money, positioning itself for a multi-quarter cycle. The thesis is simple. The AI revolution has moved beyond the model training phase, led by OpenAI, and is now entering the deployment phase. The next wave of trillion-dollar wealth will not be created by those who build the chips, but by those who provide the critical interface between humans and machines. We are talking about an AI-driven sector that is projected to grow at a CAGR of 35% over the next decade. The company we are analyzing today, which I will reveal at the end of this deep dive, is the only player in its niche with a proprietary neural architecture that doesn't rely on the cloud, making it faster, more secure, and infinitely more scalable than its competitors. However, Wall Street is currently running a classic misdirection play. They are using macroeconomic fears to shake out weak hands, allowing them to accumulate shares at a massive discount before the inevitable supply shock occurs. To understand why this is a once-in-a-decade opportunity, we have to look at the Nvidia Moat and the technical structure that is currently a ticking time bomb for the bears. To truly understand the explosive potential here, we must perform a surgical analysis of the technical landscape. On the daily chart, we are seeing the formation of a multi-month base, one of the most powerful bullish setups in professional trading. This is often referred to as the launch pad. We have successfully retested the 200-day exponential moving average, and the volume profile shows a significant decrease in selling pressure. This tells us that the weak hands have officially been liquidated. But the real story lies in the short interest. Currently, over 18% of the tradable float is held by short sellers. In a standard market environment, this would be a bearish signal. However, when you combine high short interest with massive institutional accumulation and a bullish divergence on the MACD, you have the ingredients for a gamma squeeze and a short squeeze occurring simultaneously. When this stock crosses the critical pivot point, which we have identified at exactly $4.50, those short sellers will be trapped. Their forced buying will act as a secondary engine, catapulting the price toward our midterm targets. Now let's discuss the Nvidia Moat. It's no secret that Nvidia is the kingmaker of this era. But what most investors miss is that Nvidia doesn't just invest for financial returns, they invest for ecosystem dominance. By backing this specific company, Nvidia is ensuring that its GPUs remain the industry standard for AI voice and edge computing. This partnership provides a level of creditability and technical superiority that no other penny stock can claim. Our internal research suggests that this company's revenue from automotive and hospitality contracts is set to double in the 2026 fiscal year. They aren't just selling software. They are selling a subscription ecosystem with high margins and recurring revenue. When the market finally prices in these fundamentals, the current sub-$5 valuation will look like a clerical error. We are seeing the whales leverage this information to build a fortress-like position, and the window of opportunity for retail investors is closing rapidly. Now let's get to the alpha. You have seen the dark pool data, you understand the technical setup, and you've seen the Nvidia-backed moat that protects this business from competition. The stock that is currently being cornered by the giants of Wall Street, the one sitting at the epicenter of the AI voice-to-everything revolution, is SoundHound AI ticker, $SOUN. But let me be very clear. In a market this volatile, a buy and hope strategy is a recipe for disaster. You need a professional execution plan. The entry strategy. Do not chase the green candles. We are looking for a confirmation breakout. The key level to watch is the $4.50 resistance. A daily close above this level on high relative volume is your signal that the institutional phase has ended and the public markup phase has begun. If you are a long-term investor, you should be looking at any dip toward the $3.90 support as a gift from the market. Price targets. Our conservative price target for the 2026 cycle is $7.50, which represents a nearly 100% gain from current levels. However, if the short squeeze triggers as expected, we could see a parabolic move testing the $10 to $12 range. Risk management. This is a high alpha play, which means it carries high risk. Your stop loss must be firm. We have identified the invalidation point at $3.75. If the price closes below this on a weekly basis, the institutional thesis is temporarily broken, and you must protect your capital. Wall Street wants you to look the other way. They want you to buy the blue chips while they scoop up the future giants for pennies on the dollar. The whales are already in the water. The question is, are you going to swim with them? Or are you going to watch from the shore as the greatest wealth transfer of our time passes you by? If you found this deep dive valuable, hit the subscribe button and turn on notifications. We track the smart money so you don't have to. Comment SOUN below if you're holding through the volatility. We will see you at the opening bell.